Good morning, crypto time. What? What? Bro, I only want more stop loss. The fuck? Idiotic. What the fuck is this shit? What the fuck? Oh my fucking god. Most fucking retarded bullshit. TradingView, you fucking suck. This same fucking bullshit. No. Such fucking bullshit. What the fuck did it do before? Such bullcrap.
I'm really looking forward to being together again in New York City at the end of May for Cycles in the City 2026.
It's going to be thrilling to be there. I'm looking forward as well, Richard. It's going to be a crackerjack. I'm going to bring some really juicy stuff. You bet, absolutely.
Welcome, Larry. It's great to be with you here, and thanks so much for joining me today.
Always my pleasure. I always love to talk about cycles.
It was an incredible conference last year, wasn't it?
It was, not only because of the presentation, but to meet so many people, in my case, to catch up with people I haven't seen for 10, 15 years, and be with real legends in the business. So it was a great combination, a lot of talent, a lot of input. It was an amazing presentation that what you're doing is sustaining this belief in cycles and a central place for it. I mean, it's so necessary, not just about the stock market, about cycles and everything. And so I just really congratulate you for doing it, Richard. I think it's an awesome idea.
So much. That means a lot to me. And one of the things I really appreciated you bringing up last year was how important it is to really know the people that are doing this business, right? That are trying to understand cycles. And you have met so many of the legends who aren't even with us today anymore. I mean, you were talking about, did you meet Edgar Lawrence Smith?
No, I never met him. I of course met Art Merrill and W.D. Gannon's son, John Gann, and Parnell McKenna. There are some of these people I can't remember, but James Dines, George Lindsay, Marty Zweig. I mean, we were together back then.
Wells Wilder?
Well, I started Wells in business.
You're kidding.
No, Wells came to me and
tell me that story.
He said, Larry, I have an idea for a strategy I want to sell, but I don't know how to sell it. Do you have anything you could help me? I said, well, I have a mailing list. You could try. That's good. And that started Wells. Wells really represented a group of people, Gresham Northcutt, another guy's name, Ray, think of it in a moment. And there were 3 or 4 of these guys that came up with the ideas that are in Wells' book. Wells was an engineer and orchestrator and helped with some of them, but Gresham Northcutt did a lot of the work in that particular book. Wow. But Gresham was a great promoter. And first time I met Gresham was in China. I was sitting in a bus at Tiananmen Square. I looked down and said, that's Wells Wilder. People, nobody knew who it was. I said, that is. I hopped off the bus. They ran. Sure enough, Wells, what are you doing here?
You bumped him. You saw Wells out of a bus window.
Yeah, I looked out the bus window. And I saw him in Tiananmen Square. And I said, that's Wells. Yeah. I recognized the toupee he had on it. Went out and saw it. Like, this is amazing. And then when he did Delta, he invited me to his house to come see what he was doing with Delta and how they did all that. So so many of these people. I mean, because back then we did live conferences like what you're doing. We knew people. I got drunk with Joe Granville, played pool with him one night. I mean, I got some great stories about these people. Unfortunately, they probably do with me as well. But there was more interaction, I think, back then than now.
I think interaction is so important, and that's one of the reasons that the conference is so important to me personally. It was like, we just have to do this. I know it's not what is the most profitable thing to do today, but it has to be done. We have to get together in person, and it was such a validation last year to get together with everybody in person. So many people in
Oh,
person, and it was so
come
encouraging
on.
and motivating because this cycles business isn't easy.
Yeah,
What the
stock market business is
fuck?
not easy.
The stock market business is not
Yeah,
easy.
it's not a place where people who like perfection should hang their hats. That's for sure.
Such
For sure.
bullshit.
And one of the things I'm really looking forward to this year is you and Jake Bernstein being together in person.
Yeah, gosh, Jake and I go way, way, way back. When he was just starting, I knew Jake, and we got together in Chicago and have been friends. Watch our families grow up,
Mm,
suffered good and bad things together, and
mhm.
yeah, Jake has been an incredibly good and dear friend for what 50 years now, 55
Wow.
years, something like that, 60 years, yeah, a long time. And Jake is probably the most prolific of any author in this business ever. I kid Jake. I said, Jake, you've written more books than you've read. And he laughs, but he's really has a large body of knowledge that he's contributed. And I just wish I had his energy. My gosh, you know,
Yeah,
he's amazing what he's produced.
he is amazing. And what I'm particularly looking forward to is a special luncheon with you and Jake for our VIP and Masters Working Group members. So that's going to be a
You
lot
know,
of fun.
that will be one of the strengths of Jake Bernstein. This is not
Mhm,
widely known. People come to me and want me to mentor them. I have no idea how to mentor. I'm not a,
mhm,
I never took teaching classes. I don't know
mhm,
what even mentoring means for sure.
mhm,
But I said go see Jake because Jake
mhm.
does that. Jake was
Yeah.
trained as a clinical psychologist,
Right.
and the feedback we've had from people who have mentored with Jake, they're not necessarily learning the markets from him, but
Right.
to get your act together as a trader.
Mm,
The
mm,
feedback has been phenomenal from people.
mhm.
So when we have lunch together, I
Right.
think they can check with Jake about yeah. There's we we all have basically the same indicators, but we have different outcomes,
Mhm.
which is really interesting. I was giving a seminar one time, real time trading seminar. I had a trade, it went up a couple days, whatever I got out of it, made some money. Another guy held on along, made a lot of money. Another guy got stopped out because the trade didn't work initially. And another guy said, that trade not going to work. He went short and lost money. The, we all had the same
Right.
indicators, but we had four different outcomes.
I
And
love that.
so why do we get different outcomes? That's where Jake really excels.
Yeah, there's some really interesting philosophical nuances in there, but we'll save that for another time. So, I was going to ask you. I don't actually know how you got into trading in the first place. I've heard you talk many times. I've met you a few times. I actually don't know how you got into trading in the first place.
The first thing was a stock market crash in 1962 when John Kennedy rolled back steel prices. The stock market crashed. I was in college,
Hmm.
Eugene, Oregon, University of Oregon. And
Hmm.
so I pointed to the newspapers. What does this mean? The stock went up. This was the day after the crash. The stock went up 1 point. What does that mean? 'Cause I didn't know. I mean, my dad worked in a refinery. I worked on ranches and stuff. I didn't know what that meant. And he said, well, that meant if you would have bought that yesterday, you would have made $100. I go, holy Toledo, $100 in a day without
Uh-huh.
going to work?
Uh-huh.
I'm in. I'm all in. How do I
Uh-huh.
do this stuff? Because I thought it'd be really easy. Just
Right.
guess if it goes up a point. Well, and back in 1962, $100, like my first car cost $100. It was a lot
Wow.
of money.
Okay.
So it was just, it was greed. I mean, I was like, whoa, this looks like easy money. Well, it isn't. It's a lot of hard work. The old cowboy sayings that you're too lazy to work and too honest to steal. So they're right. That's why I rode bareback when I was young. That's why I trade the markets. Like, yeah, it looks like the ideal business because you don't have a boss, you don't have employees, you don't have customers. Like, what could be better than that?
Right.
So to me, it looked like the ideal scenario, but I was frankly driven by greed, as I guess we all are to do what we do.
What would Larry today say to Larry from 1962?
Oh my gosh, you know what you were getting into. But Richard, that's part of this grandiose picture.
Yeah.
I was set to do something else mentally in my life, and I ended up here in some predestined fashion,
Hmm.
some cyclical. I think so much stuff
Hmm.
is predestined to a point. We still have some
Hmm.
control over our lives, etc. But
Hmm.
but still, like I never thought I'd end up doing this, and a lot of people
Yeah.
end up not doing what they thought they would do.
Right.
So I realized maybe 25 years ago, because I was trying other things. But no, Larry, this is your destiny. This is what you do.
Hmm.
Forget trying to do all these other things. This is your destiny. Get good at this. Perfect
Hmm.
this craft as much as you
Hmm.
can.
Hmm.
Uh, and I think the stock market is destined to do certain things.
Hmm.
And to that extent, I guess we are as well.
Hmm. And you talked about like your time in Montana and being kind of immersed in nature and kind of becoming sensitized to cycles in nature. Yet you don't really, you're not particularly mystical about cycles. You seem to approach them very practically.
Well, that's because I went through so much stuff. I mean, when I was a kid, I fell for everything that came down the pike. I mean, I went to
Uh,
Tassajara, the Zen Buddhist monastery. I dabbled in astrology and anything,
mm-hmm.
Scientology,
Mm-hmm.
biology. Well, I tried everything,
Mm-hmm.
and eventually, well, wait, this stuff works or it doesn't work, right? And
Mm-hmm.
my sense was it may work a little bit, but nobody really had it all wrapped together in any one place. I realized, there's no be all one thing to do. And if we went out for dinner tonight, you might order steak and I might order lobster or fish or whatever. We all think differently.
Yeah.
So you have to find the intellectual shoe that fits you. It could be Elliot Wave. I don't get that at all. Yeah, Bob Proctor's a dear friend.
Mm-hmm.
I can't even begin to comprehend it. Um, but my mind just doesn't work that way. So you need to find that niche where you go, oh yeah, I get this real quickly. That's probably what you should follow. If it seems, if you're quickly to learn it, then that's the way your mind works.
And so, how do you use cycles today?
Well, carefully.
How do you
um,
do cycles analysis? Do you sort of do it using math, or do you have some favorite cycles that you've come to rely on over the years? Do you
I
eyeball it like Jake does?
No, I like to use mathematical cycle predictors or projectors that will find cycles.
Mm-hmm.
And I can look at a chart and say, yeah, there's a 30-day low, 80-day low, or whatever, but I need
Mm-hmm.
to know a lot more about it. Like I recently did some stuff on the her cycles,
Mm-hmm.
the 40-day, the 60, the 9-year. What's the correlation to actual price fit? Do these cycles fit the price? So once you start to doing it, say, yeah, these are the strong cycles, and even then, Richard, as I see it, cycles are a condition. They're not a be all end all. They say this is a
Yeah.
zone when I
Yeah.
should be looking for a move. Now
Yes.
my next
Mm-hmm.
step is to go, I'm in that zone. What is the reliability of that move? And
Mm-hmm.
that's what I've been working on the last couple of years. Okay, we're in a cycle zone, and we should rally, say, for 3 months. Well, but the potential, the percent of times we rallied in that zone might be 40% because
Mm-hmm.
one was a big move. It looks like a big move on your chart. So
Okay.
there's waves within cycles, and I want to measure the accuracy of the wave within the cycle.
Mm-hmm.
But I wouldn't trade just because of a cycle.
So you've said uh, don't predict A with A, or A doesn't predict A, meaning don't just use price to predict price, right?
Yeah, I think that, and I have some slides in a moment we'll look at that. I like to look at exogenous data. I
Mm-hmm.
think charts move for reasons, prices move for a reason. So I want to look at those reasons. I don't think that charts
What is
drive
the reason?
the market on a very short day-to-day basis. The market closes way down, it's low. It looks like a horrible day. You're going to get selling tomorrow. If you don't, that's really bullish. So
Mm-hmm.
yeah, very short-term charts show the emotions of the day, but prices go from say $60 to $80 for a real reason. Earnings are up. There was a shortage of wheat, whatever it is. So I really want to get into the reasons as opposed to looking at chicken scratches on a chart paper, which I did for, I don't know, 25 years, 30 years maybe.
All right. Well, let's look at some charts.
Okay, do you want me to show my PowerPoints?
Yes, that would be great.
Well, this is interesting. This is Anne Rand. I just loved her book, Atlas Shrugged. She always said, check your premises.
Do you still love it?
Oh, yeah, absolutely. Oh, and, I think Elon Musk has walked right out of the book, frankly.
Elon Musk is John Galt, huh?
Yeah, he's the closest we've seen. Yeah, he really is. He's from another planet.
He is.
So I'll look at a cycle like the 18-year cycle is a really important one, but how does that correlate to actual price fit? About 40%. 9-year cycle comes in higher at 61%. So 40-month cycle, a lot of people talked about it to 50% fit. So if I'm interested in a short-term basis, an 80-day cycle got a 62% fit. Well, if I'm a short-term trader, I'm going to look more at this time frame. Or if I'm interested in a very long-term 18-year cycle, I go, well, I have low correlation with this. So
did you pick those cycles out because of their correlations or because those are sort of widely known cycles?
Because these are what her set of the cycles are.
Hearst,
I
right.
didn't pick the cycles. These were
Very
his
good.
cycles. So if I'm interested in that almost 18-year cycle and I see the correlation is low, that may mean that within that cycle, there are waves that have higher correlation. So if I'm infatuated with that cycle, I still want to break that cycle down to look at the waves within the cycle. There might be some really dominant, strong time period within that 18-year cycle. So but it already looks me like, well, there's probably something that's going to help me predict a long-term better than an 18-year cycle. So I got to go look for it. Let's go to our next chart. This is what I was talking about. Exogenous data is a better predictor. Stock markets move because of, you can fill in the blank, whatever you think, astrology, GAN, trend line, whatever. I think inflation, rates, earnings, money supply, and futures production and demand. That's why I think markets really move. So instead of studying the cycles of, say, cattle, I'd a lot rather study the cycle of corn because cattle are fed on corn and fattened on corn. Or maybe a weather cycle. I know that hogs live a certain time period, about 44 months. So I want that cycle should be important in that market. I know there's a cycle to earnings. So as an example, like inflation, I think really is significant in our economy. So we can look at inflation, which is the black line, and the red line is the cycle. It's a real clear 6.3-year cycle in inflation. And as you know, with cycle, this means back in 2003, we knew inflation would go up because we knew this cycle way back here, over here. We knew this was a cycle projection. And
let me turn.
So how come that's not a perfect
down the
sine wave,
volume.
Larry? What are the squiggles in that line?
The squiggles, I think, are randomness. That's that there's so much randomness that we're never going to have perfection. Plus, if I smooth this out, I would get rid of the wiggles. But I'm more interested in saying, what's this little wiggle up here? How much percent of time do we rally in that little wiggle, or maybe from this point to this point, maybe stronger than there to there. So I look at that. But for inflation, it's like, hey, I want to know when inflation is going to pick up.
Yes,
so
6.3.
Here's the same cycle and projected out from 2014.
So I don't know
we're going to start to
what this.
I think later
100
this year,
and
2027, we'll see inflation pick up in the marketplace.
Wow.
Which 20
raises the
point
question. So
spike was.
What does that mean?
I know you know that amplitude.
Oh, maybe something with the war.
But that does
or
look like a
Trump tweet.
A very steep line.
Yeah, good point. Here it looks like, wow, black line went up this much, red line went up this much, black line went up that. But here, red line didn't go up much and black line did. So it tells us this area, this area, this area. They don't tell us the magnitude, as you mentioned. So we don't know how big inflation will be, but I would think we're going to start to see inflation.
Yeah.
Yeah.
Which begs
I
the
do think
question,
it's
what does that do for
must have been a
stocks?
Trump tweet.
Yeah.
So now I'm
He's
doing the
really
exogenous thing and looking at
desperate.
the cycle in
Let's see
red,
what
inflation.
Mm-hmm.
At 1993, the cycle was turning up, saying, "Oh, look what happened to stock prices."
oil,
And
yeah,
1999, they turned up, and we topped in 2001.
or
The blue
insider
line is the
trading
Dow Jones, and the black
anticipating
line
The
is
what is about to
inflation,
come.
yeah,
and the red line is the forecast
Yeah.
the cycle, yeah.
of inflation.
Mm-hmm. So, oh, there's an inflationary pickup here. Oh, look what happened to stocks. Inflationary pickup. Look what happened to stocks. So, inflation
Sort of
can
not
be.
what I am trained to think, right?
Of course
Inflation
not. Of
up,
course
bad
not.
for
No.
stocks.
Oh,
I know what we're trained to think. And the
could be.
biggest one, Richard. This is. I may drag this chart up and bring it this summer. Is that I think the leading
Last
cause of
week or
inflation
soon before he
is high
spoke.
interest rates.
Mm.
Happened last
Inflation,
week.
you increase your interest
Um,
rates and you get inflation. It's real simple.
Mm-hmm.
And there's a reason why. Because if interest rates are high, people who have money
like,
pay interest on their money. And they
you
have the
remember
money, so
what
they're going to
day?
spend it.
Wow.
And people who don't have money, I better buy it now before rates go higher. So I
Very
think
interesting.
Right, a spike.
I will show it this summer. Definitely a correlation.
Oh,
High
you
rates
meant
drive inflation,
before
increases
he.
the money supply. And I'm just so absolutely clear of that. But anyway, we'll get off the point. So we know this is the red cycle of inflation, but at times, right, the stock market starts to come down. I'll
Yeah.
address that in a moment. But let's bring us up to date. So here's 2010. Inflation picks up. Well, so stock market again, the cycle picks up.
I need to
2014, the
find
cycle picks up. Look where we are now.
Okay.
Starts to inflate, and that's bullish for stocks
Right,
until
the news, yeah.
this is where everybody agrees inflation is bad, but until when? Until it gets about 5%. When we
I mean,
start
right
getting
now,
5% per annum, then
again, this
you
week,
got a lot of confidence in the economy.
first week
But in the
of the
meantime,
month,
until we get to that
NFP
level,
week,
we're not at that level now.
I
Inflation is
hate NFP week.
Richard, I really appreciate what you did. Richard,
This
gave
kind
me
of stuff
back issue
happens
of
often
magazine. I used to get it when a physical magazine came out
during
in the
these
60s,
weeks.
70s. A big blue magazine came through the mail, read through it, looked at all the cycles, all the incredible work that Gertrude
And
Sherman
now
had done. And
all the
I said,
war
let's go back
stuff on top of it
look back
and
at it.
Trump.
So
Mm-hmm.
this was
So,
the July 1969 issue of the Foundation's magazine. There's an article, Automobile Factory Sales in 1969 at a 13-year cycle. That was 1969.
and
Now we're
then
in 2026, almost 60 years later.
Trading View,
So I
all
thought,
stupid.
let's look at these cycles and see, did they hold up? Is there persistence
I
in
was
the cycle?
holding one runner
You know,
from this
we've
trade.
gone through a lot of cycles in the magazines, and this is just one of many, but it's really interesting to me.
Like stop
This stuff
loss.
you can download
Audio cutting out again.
from the U.S. Bureau of Economic
Looking
Analysis.
chart-wise, we
It's
are
published
at
on the
the
Fred
target
webpage.
of
You
this
have access to
long.
it. It kind of looks cyclical, comes up and
Well,
goes down. That's
I mean,
It does.
so. Then I decided to see about that 13-year cycle, which is shown in blue, against the black line, which is sales. In other words, the black line is just what you saw here, right?
Okay.
But now I put the 13-year, like, wow, look at that. And that it's like, whoa, wait a minute. This is really
Yeah.
hot. Where have we been? Why didn't I pay attention to that magazine?
yeah, now here we,
Really
if we hold this level,
so
then
forward, we see
yeah,
another cyclical low in sales.
just
Where we
gonna
are now. We
keep
should
on going up,
sales until about
at
2000.
least according to volume.
435. Okay, well, that's interesting.
Anyway, yeah, I had this
I like
stop
data.
around
If there's really a
here.
13-year cycle in car sales, there should
I
be
don't know
some
what I
reflection
did. Like, I tried to
Ford or General Motors.
adjust the stop loss or something.
13-year cycle. Optimization.
And then suddenly,
But take stock data.
as I was moving a stop loss,
So
it
this
was
is what I
moving
found
my
out. And
take
Richard's
profit
like,
too.
wow, knock my socks off.
And then
Make sure I know what we're looking at here.
I was trying to put my stop loss to break even.
The stock
which would have been
That's right.
here,
The black
439,
General Motors,
and then at
Ford,
here 420,
the cycle of 13
it just
projection. Wow.
closed the whole trade.
Wow, it really called it.
So
Called the big rally we saw in 2020.
I got frustrated.
Continue rallying until
Thought, okay, I'll get back into this trade just with the one runner that I lost, and then all this bullshit happened.
Information that the foundation had all these years ago still has application, which whether I'm going to use this to buy or sell the stock, to me, it's an
So I'll just
question of, is there cycle persistence? Do cycles hold up?
Yes.
Because if they do, then I can use them in making
volume.
decisions. If they don't, well, I'm chasing.
You mean volume I was showing, or
I've done numerous studies based on
what was the result at the end?
and took those into the
At the end of what?
They're there.
This
So how would
trade?
you use this cycle, Larry? Would you just? I know you.
Well, this trade,
Things that's important to you is trend, and so that stock prices trend up.
the one I was showing,
and that cycles are
well,
better
this
on
trade
bottoms than
was working great,
stocks.
right?
So
Went short here,
not really,
took some profits here, and then here again.
makers until 2025.
Yeah.
And then I was holding
If I really liked an
one runner for,
look at what about this wave for the middle of 2026 into 2027?
Okay.
What percentage of
till,
time?
yeah, until here. But yeah, I mean, I would have gotten stopped out anyway,
Because I have a real
but
big wave cycle here.
because of that stupid stop loss,
In this wave. So
just kind of
waves are going to be my trading
pissed me off. And I was like, okay, I'm gonna get
This would be my next, like, yeah, we could have a
back into that trade.
like maybe March, April.
And then,
I'd have to go in and
anyway, all this
okay, how
stuff happened.
how valid is this wave? Just a little something like this is the start of a significant wave.
I mean, this is demo here anyway. Just trying to
let me see if I can kind of
mirror
sum up.
the trades I'm taking on my funded account. Thank God I didn't take this second trade on my funded account.
What's driving the
Um,
shared with us today that you think the biggest driver
there, I just got stopped out
is inflation.
as I was intending with a stop loss.
Right, and so inflation you're predicting is gonna rise in 26 into 27.
Yes.
Which will likely mean higher equity prices,
right,
and interest rates, which was interesting.
Now I understand. Do you enter with the hand or on your funded account? You mean that size?
Lower rates cause less inflation. Higher rates
Is it a lot of money?
Higher rates cause inflation. I usually think inflation.
Oh no, like,
I know that's
so here on TradingView on the demo trade, I'm using the mini contracts for my analysis that I do here on TradingView, right? I mean, TradingView is probably the best platform to do analysis. The trading executions are probably not the best, but analysis is, and I'm using always the mini contracts for my analysis because I think that's really the most accurate chart. But no, on my funded, I use micros. So whatever you see on the demo here on TradingView, you have to divide it by 10, right? So this is one mini, but that would be one micro on my funded account, because you saw that spike. I was like down like here 6,000. So
Another good
that would
bit
have
of
been
information, and it
a
makes
blown
sense as well,
funded
is the
account.
stock market. I can show that to some because the thing when the stock market rallies,
Yeah,
people
yeah.
have more money.
So
When people have
no, I'm
more
using
money, they buy
micros
stuff.
on my
So
funded accounts.
the basis of the Austrian school is right that the more money in circulation,
Two,
more
yeah,
people
between
put more
2
money in
and
bonds.
5.
Too, and one in the old days or higher rates.
Again,
Not in the stock
the
market.
second trade
So
here,
those are driving forces.
I just wanted to,
Larry. So I know you're actually writing a book on
get
psychology.
back into the trade, this trade here, because I was stopped out at 420 here when I wanted my stop loss to be
Tried that. That didn't work.
around break even, like a little bit higher, but
Write a book on
I don't know what the fuck happened here with TradingView.
I have
So I wanted to just to get back in with one contract.
because that's like such a passion that I have.
Um,
So I started the book.
but yeah, then I started
Let her go.
to add more,
I've got
obviously,
5 chapters
but
into it so far, and hopefully it's
that should be great for partials.
And what you shared with me that one
Yeah,
of the
I mean,
is that it would
this all depends
some of the policymakers and
how
for example, and
good do I feel about a trade.
that's coming.
Yeah, and the idea is
Two micros, it's like I'm just being careful.
study of cycles. I think,
But right now, this whole week,
but now you read all the papers of the Federal
I
Reserve.
think everyone should be very careful.
Econometric formulas.
NFP
Guys, 2 years
and this war.
it did. So if the Fed, and maybe they did know that, and they didn't tell us that, but
I mean, remember
and it did. So they could have
the
adapted
beginning of last year, like about a year ago,
and we would have
when Trump started all these
so
tariff wars.
cycles. They don't talk
I mean, that was crazy.
and
I
whatever the case, at least
had notifications turned on for every
thinking about
Trump tweet
we're gonna start to inflate. That means
because
when it gets
if you were trading at that time, you remember we had this kind of stuff like
so
at least a few times a week,
a little bit into the future.
at least in the beginning, like
And I know, speaking of that,
January, February, whenever you started
7 to 32.
the tariff wars.
Yeah, I wish I was smart enough, to figure all this stuff out. I think there's a bear market.
I'm struggling with executions on TradingView. Trader weight is faster but harder to adjust and set my targets when scalping.
Well, there's been 4.2 billion.
Well, I mean,
This guy's been wrong. So
on TradingView,
bad odds.
Right, those are bad odds.
like
Had one major
you can't really or you shouldn't really use
crash in 1929. What's that I think we'll ever see again.
market orders.
Now the Federal Reserve System. And
You should always use just limit orders.
That was a real.
And then,
Everything else, the market is down for 6-10 months, boom, pops right back up.
I mean, I
you know,
remember March of
even if TradingView makes a mistake
2002.
in executing the order, like there will be a huge delay sometimes.
Right now, the Dow has been
Yeah,
maybe this is happening
yeah,
again.
limit orders.
As you get to these turning points, you have to judge like what's
Yeah, because
the soup du jour here. What's
TradingView is just, I don't know if it's just showing the executions delayed or if it's actually delayed. But I'm pretty sure it's just showing everything delayed. So if you have a limit order here, whatever, for example,
I'm going to bring some really juicy
then
stuff. Absolutely.
most of the time it will translate to your trader weight.
Ask you one last thing, Larry, because asked you this once, and I'll never.
Yeah, for me, trader weight.
What is
Then again, I would have to
important factor in your success, and you said
try to draw everything I draw here on trader weight. It's like, no, I'm not gonna do that. I'm just gonna use limit orders here, and those should transfer to trader weight, right? So yeah, but market orders, I think that will be not good.
In my case, bareback or a bareback. 8 seconds is an eternity. It's like it's 2 years in 8 seconds.
So when you look at volume, you look at like the volume I showed here, or you look at different kind of volume.
Really smart. I would have borrowed $100,000 in 1962 when I
All
started.
right, see you then.
Went to bed under an electric blanket and woke up now.
Bon
I don't know,
appetit.
$15 million or something.
Mm-hmm. With no stress.
With no stress. No.
Ah, okay, I see. All right.
No, nothing. But I held on, right?
Yes.
So, like I said, the example where we had one, I had a signal real-time trading, right? One guy lost money, one guy lost a lot of money. I made somebody, another guy made even more money than I did. It's the outcome of how you do, and it's based on your ability to have patience, your ability to persevere. I've had, I don't know, millions of trades, but I don't know, I've ever had very many trades that were successful from the absolute tick I got in. They were never against me and went straight up and made a lot of money. I don't buy the absolute lows or sell the absolute highs. They're back and forth. I'm up and down, and unless you can live with that emotionally, hold through that, you're going to get out at the wrong time.
Right. Kind of brings new meaning to the idea of a bull market.
Yeah,
yeah, bull market, great. No, bull markets are tough to endure. I mean, think of the gold and silver markets here recently, right? They've been.
It's hard to hold on. It's human nature.
Hard to hold on.
Human nature is to get out. So if you get a winning trade, you need something that'll keep you in that trade for whatever the time frame you're trading for, 5 years, 10 days, whatever it is. I need, in my case, I'm such a weak person, something mechanics.
So for anyone who's still here right now,
something that will assist.
so I want to see price go below this gap,
Like this way or that way. I'm not that good at
that, which it might not do. So
well, Larry, I could talk to you for
I'll just.
But I really appreciate your time today, and I'm really looking forward to being together again in New York City at the end of May for Cycles in the 2026.
Well,
it's going to be thrilling to be there.
It's going to be.
Richard, thanks again for doing this. And
a lot here.
This summer. It's going to be a crackerjack. Cycles matter because they show us the future. Nothing else shows us a future path. Nothing that I've ever found in over 60 years of doing this.
Foundation is bigger than markets, right? It started out bigger than markets. It's still bigger than markets. It's bigger than us.
There is no such thing as a black swan. It is merely a cycle that was not forecast or anticipated.
7:50 a.m.
To me, it's huge. If I can get a glimpse of the future, just a little bit of the future, I'm way ahead.
I think that the Foundation for the Study of Cycles has a role to play in both bringing technology to the world, but also really emphasizing agency and human agency.
No, hold on. Yeah, I'll just leave it here. Again, this is a complete demo trade. Like, I'm not trading it on my funded account. Good RR. It's probably gonna get hit, but I don't care. Alright, so I didn't see any. I was listening to that interview in the background. I didn't hear any big forecasts.
Wow.
Of course, I didn't really
Really intriguing to me.
listen.
That's Right. The black is whether I'm going to use this to buy or sell this.
All right. There's another one, another interview. So let's listen to that.
Hi, gang. Larry Williams back here with, I guess, our annual thing with StockCharts.com. Aren't we lucky to have them support this with my look at 2026? You know, we did this a year ago, looking at 2025, and now it's time to look at what's going to happen this coming year. So let's get right to it. The big stock of the year has been NVIDIA. Here's my forecast out for the first few months of 2026. It looks like we're going to see NVIDIA come down into the middle of February, and then we start a good rally up into April. In fact, on the longer term basis, which is the blue line, that's the wave of the longer term cycle. NVIDIA has rallied about 75% of the time, generally, when this wave has been there and this time frame coming up from mid-February into May. So you NVIDIA followers, there's a forecast you can get onto right here and right now. Well, let's look at the past a little bit. The following 6 slides are really interesting. You're going to see a lot of this in the coming couple of weeks. These slides are from 2023. Got it? A long time ago. Oh, tough times. 90% crash has begun. 2023? 90% crash? Only 10% people absolutely dead wrong. Tough times, the worst recession of the century, Jim Rogers. Absolutely wrong. Tough times, Ray Dalio. Everyone's going to be wiped out. We weren't wiped out. Tough times, 361 days ago, we're on the brink of a zombie apocalypse in the United States at 25 days. That was now 3 years ago. It didn't happen. The sky is falling. You're going to hear so much of this negative news. Don't listen to it. And you'll see why in a moment. Even the president of FedEx warned worldwide recession a year ago. Well, we didn't have a worldwide recession, but the worst is this guy, Jim Rickers. Oh my gosh, it's coming. The 2022 recession. We did not have a recession in 22, 23, 24, 25. The professional bears, the purveyors of pessimism, you have to be really careful of, because at this time of the year, they come out of their cave with all the gloom and doom. Now, there's a time to be bearish, and there is a time coming up. I'll talk about that a little bit later. But for right here and right now, don't listen to these guys. I'm going to get you right back to reality. Well, here's a huge thing in the stock market, PE ratios. This is a chart of PE ratios. If PE ratios are 10 to 15, this is the annual return in stocks. So low PE ratio, 10 to 15, we've had 15, 20% gains in the stock market. That's really
All
great.
right.
When P's get out here,
So
P is in 30, well, we're below
again,
that. We're actually have negative
it
returns.
needs to go
This is
below
the driving
here.
force of the stock market. Pay attention to
250.
this,
I mean,
not the Cassandra. So
450.
where are we now? We'll see in a moment. We're
450,
this area right
445.
here. So we can expect moderate gains in the market, 5, 8, 10%. We're not in this area, in the danger area. We're actually about 22 as of today. You'll see that in just a second. In this area, which is positive for stocks. In fact, here it is.
All right.
A
Let's
year
go
ago,
here. Come
PE
on.
ratio 27.2. Well, it's better now. It's 25.0. And the estimate of this coming year is 23. Well, 23 puts us like over in here. So this is a fundamental factor of the market that trumps so much of the mumbo jumbo about stock prices. We are not excessively
This
cheap in
interview
terms of
is
stocks, but we're not
from,
overpriced.
I think, what was it?
We're in this area, and as you saw, we're in this area right here.
January.
For the stock market.
No, even
talked about the
December.
StockCharts.com has got a great
So I wonder
I'm going to share that with you in a moment.
if he
But here's the
changed
big
his
takeaway of the yield curve.
outlook.
Until it gets above 1, we don't receive recessions. And we're not there now. So you can follow this on the St. Louis Federal Reserve chart page, but we're not even close to getting to the danger point of the yield curve. Not only that, this is really great. This is StockCharts.com. You can get this chart for free on the internet. Here is the yield curve at this point in time, just before the crash that we saw. And look what the yield curve was doing. It was coming down. That's a negative for the stock market. Then before the 2008 stock market, bear market, the yield curve was coming down. Stocks went down. Then before the big crash we saw, not crash, but pullback in 2022, the yield was flat to down. And here's where we are now. The yield curve is up. That's positive. This shape of a yield curve is bullish for stock prices. So we're looking at some fundamental reasons here. The yield curve, a lot of other good fundamental data, the PE ratios, but there's some bad stuff out there. Well, maybe bad stuff. I think inflation is going to come and pick up. And we talked about 3 years ago about inflation would start to come down based on my cyclical studies.
Inflation
And
is
inflation
coming
came down.
back.
Now, though, as you can see, my cycle.
Believe that, guys.
Yeah, you got it. You can see the picture just like me. We're going to start to see inflation pick up.
Yep.
Now, is that good or is that bad? Well, it's good to a point and very bad after a point. We just have to see where that's going to go. I'll have more about that in my 2026 annual forecast report. But jobs also matter. Jobs are huge in terms of a fundamental aspect of the market. So I'm going to take a look at jobs as the population ratio, the number of people as a percentage of the population. Now, most analysts look at just the number of jobs, how many people are employed or unemployed. I think that's wrong. You have to look at that number in relationship to how many people are looking for jobs, not just the raw number. And the raw number has started to do some interesting things here. So message from the Rocket Man, break over now, get back to work, right? Aren't you glad you're not in North Korea? We can actually do a cycle study of that employment ratio you saw earlier. This is the cycle in blue and gray of the employment ratio. This is when jobs pick up. I've overlaid this with the Dow Jones Industrial Average in red. So you can see when this cycle picks up, stocks usually have been pretty strong. We're going all the way back to 1970 here. That wave again came in 1982 and a big up move in the stock market. So it looks like there's a correlation, maybe causation. When people are working, stocks go higher. We see in 1993, that same wave in the cycle picked up, stocks picked up. 2004, wave picked up, stocks picked up. So there's a fundamental driving force. When people are at work, we see bull markets. 2015, bullish market. And this is where we are right now. This wave of employment, people getting jobs, going back to work, starts to pick up from about the middle of 2026 into 2028. I think that's bullish for stock prices. I'd also like to step in for just a moment, thank Chip Anderson, the entire gang at stockcharts.com. Without these people, I wouldn't be here. You wouldn't have seen all the things I've done this year. They do it for free of charge. It's just an amazing service they provide us with. Chip and the whole gang there. Wow, my hat's off to you. Thank you very much. And I hope all of you will thank them equally.
Hey guys, it's Grayson here. I hope you're enjoying this video from the legendary Larry Williams. Now, we are so honored to have Larry's content here on Stock Charts TV, but we're even more honored to have him as a power stock charts user. Larry has been using the tools, the features, the charts, everything that we have at stockcharts.com for years, and he recommends that you do the same. So remember, if you want to trade and invest and analyze the markets the same way that Larry himself does, you got to be a Stock Charts member. Visit stockcharts.com. Look for that big green button at the top of the page. You can get started with a one-month trial. Level up your trading and investing toolkit with the same tools chosen by the legendary Larry Williams. Now let's get back to the video.
I want to see here a
Smith
candle bodies below here.
Smith wanted to prove that stocks outperform bonds only in inflationary time periods. He did a lot of work on this in the 1930s, and his research showed stocks outperform bonds over time. Prior to that, people were big investing in bonds and not in stocks. And Warren Buffett read his paper and said, that's it. And Buffett took a huge direction based on that. Buffett's application retained earnings drive compounding. So Berkshire invests in firms that
obviously,
in other words, they're growing companies. He looked for
this was manipulation.
Discipline. That's one of the keys that a lot of people haven't really picked up on Warren Buffett. They look at ratios instead of, are these people reinvesting in the company? Are they growing the company? And that's been one reason why he's been so successful, but it was based on, in fact, Buffett said about Edgar Lawrence Smith, he was one very smart man. He figured out when stocks are better than bonds. So Edgar Lawrence Smith did some really interesting stuff. In addition to fundamental ratios, he looked at cycles. Way back in the 1930s, he said the most dominant cycle in stock prices was about 3.5 years. And it had been up to that time. So what you're seeing now is this cycle of about 3.5 years, but from 1930 forward. So we're doing out of sample here.
Interesting.
And there was a cycle low, you see in 1995, an Edgar Lawrence Smith low, another one 1998.
Interesting.
2005, another one right there. Oh my gosh. Those Edgar Lawrence Smith cycle lows out of sample have been pretty good buy points. We're going to bring them up to date here. There's a 2005, 2008, 2012, 2016. Edgar Lawrence Smith was really onto something. This guy was as brilliant as Warren Buffett says he was. 2019, 2023, we got very bullish back here. My panic indicator gave a buy signal here. We've been long ever since, bullish ever since. And look what's happening again in 2026. The Edgar Lawrence Smith sets up another buying opportunity in the market. So don't listen to the Cassandras. They're going to be out there preaching doom and gloom. Don't listen to them. We have another phase coming up in that powerful stock market cycle. Now, a lot of people saying, well, we had such a strong year in 2025, the market's got to come down. Well, maybe, but we have 85% odds of 2026 not declining. Here are all the up years we've seen going back to 1806. And those are the up years versus unchanged years and down years. So we've got high odds. These are all years ending in 6, right? So 2016, all these years ending 6, the majority of them, 85% of them closed higher. 4 of them didn't have any gain one way or the other. So we have even more than that didn't get damaged. And only 4 times did we see down years.
I guess it wants to
That's 6 part of the decennial pattern.
go back up.
It's been significant in the marketplace. People also, well, we've been 3 years in a row. Well, does that really mean anything, or is it just numbers? Probably just numbers. 11 times we were up 3 years in a row, and 8 times the next year was also up. So again, we see a strong probability that the trend will continue. In fact, look, we had one string in 9 years, consecutive years up. So don't be too concerned. You're going to hear this a lot now. Trust me. Because, we've been up strong 3 years. We have to have a pullback. We have to have a pullback when fundamentals are there. When the P/E ratio is real high. When there are fundamental issues, when we don't have jobs, when people are not getting employed, when we have high inflation. Those are the things that drive markets up and down. What happened to artificial intelligence this year? I ran a study on the Dow Jones stock to see which ones in the Dow have been the strongest for the year. Look at Caterpillar. It's up 64%. Goldman Sachs, Johnson & Johnson, NVIDIA, it's up 30%. So you don't have to put all your focus on the hot stocks of the day. There were some great value buys in Caterpillar, Johnson & Johnson, IBM. Oh my gosh. So the point is, don't lose focus. It's a big market, and don't get so focused you're only in one specific little minutia group of stocks. Well, life is full of cycles, and I'm going to talk a little bit more about those cycles now. We have carbon cycles, water cycles, cycles in every place, especially in stock market data and in money. This is an interesting chart. Look at this. Of course, the red is the Dow Jones Industrial Average. The blue is the cycle of money expansion, M2 in the United States of America. In other words, money supply. And there seems to be a strong money supply. About every 6-7 years, we see a low in money supply, and then we see money supply pick up. Does that correlate with stock market bull markets? Well, it sure did back up to 1980. This goes all the way back to 1960, right? So when a lot of money comes into the market, stocks move higher. I'm bringing that up to date. Here's that same cycle in money, 2022, 2005, 2009, 2012, right there. You're probably wondering, where are we now? Well, let's take a look. It's coming up from 2012, 2016, 2019, 2023 was the last time I was back here. I was over here. Nice time to buy stocks. And in 2026, that lower next upswing in money supply and increase in monetary growth in the United States comes into play. Is it guaranteed we'll rally? Does it mean we rally straight up? No, but it does mean the bias is to the long side of the market because money does matter. How about the crowd? Everybody's been really bullish recently. So what is the crowd? Can we use investment sentiment here? I have a great sentiment buy signal coming up for you. So grab your pencils. You're going to love this one. Here it goes. You ready? This is a University of Michigan sentiment survey. That's in black. It goes roughly from about 50% down here to everybody's bullish up here at 100%. But look at it. Here's the Dow Jones underneath it. As the sentiment goes up, when the stock market goes up, stock market goes up, sentiment goes up. Market comes down, sentiment goes down. Market goes up, sentiment goes up. Market comes down, sentiment goes down. I kind of think the University of
Just
Michigan,
chopping around in here.
teams, but they might have some problems with the data. Here it is again. Market's up, market's up. Market's down, sentiment goes down. Market rallies, stocks rally. Markets come down, sentiment goes down. I think the University of Michigan sentiment survey is nothing more than a reflection of people following the Dow Jones Industrial Average. But there is a big blue buy signal using that data. Let me show you. Here's a sentiment index. You see, it goes from very bearish, this is 55% bullish to 100% bullish. But when it drops below 60%, look where we are in stock markets in red. Buy signal, going all the way back to 1973. The Michigan Sentiment Survey dropping below 60, there it did in 2008, bullish. 2011, really bullish, great place to buy stocks. 2022, it dipped below 60, another nice place to buy stocks. The low we saw this year, it dipped below 60. It's currently below 60 as well. So if you're looking for a pretty good long-term buy signal, when the University of Michigan survey drops below 60, you better start acquiring stocks. 2026 coming up. Can we know the future? Is it really, really possible to know the future?
Interesting. There are no gaps.
Look at that.
There's one here.
One is there's a
and this one.
tendency survey for the United States that shows when people are getting very bullish about their businesses or very negative about their businesses. And of course, you know me, I'm going to put that into cycles. It tends to be about another 7-8 year cycle. The black line is the indicator itself, and the cycles are the blue line. And that blue line plays out in the stock market. When we've been in a big expansionary phase, going back to 1982, in their surveys, these people, businessmen, not consumers, but businessmen turning bullish, we've seen bullish rises in the stock market. Here we saw 2006 up into the peak in 2007, 2011 bullishness, 2015 bullishness.
Hey, okay, here it is.
2020, following COVID, and 2025 was the last time the cycle was in phase and stocks rallied.
I want to see
that
this.
cycle starts to come down though later in
So
2026.
it's 1
So there
minute,
are potential problems.
but I want to see it.
Now and maybe later that year, we've seen some fundamentals.
Maybe even on the
have strong influence
15 minute.
and they're bullish. I've got a lot of emails about this. My forecast 2026 report will be ready January 1st. If you want to get a copy of it, go to ireallytrade.com forecast. Write that down. You don't forget it, ireallytrade.com, and you'll get an email when the forecast is done. I've been deep into it, getting it ready. We'll have 60 of the most active stocks, all the actively traded future markets and major markets of the world, inflation, interest, and when the next recession is going to come. This is our 2025 forecast report. We thought we saw an 84% probability of 2025 rallying, pretty much what we got, isn't it? So can you see the future? I think we get a pretty good view of it. Our forecast report in 2025 said any way you look at it, cycles are bullish for 2025, and they've remained that way. This is our forecast for 2023, our natural cycle in blue, and the black was not known when we made the forecast, but you can see the market pretty well followed the forecast. 2024, that was the cycle forecast. Again, we got the bull market, the cycle forecast. 2025 forecast will come down at the first of the year and then rally. So I think we can get a pretty good glimpse of what's going to go on in the future. 2025, we said expect a bull market. Oh yeah, lower housing prices. That really happened. Housing prices declined. But it was calling for recession. We didn't get one. We said also, no way. Inflation, a bounce, but no change in direction. Employment, no serious decline. Those things all happen. It's kind of interesting. You know, I read all the reports from J.P. Morgan and Chase and Goldman Sachs and like, there's a bunch of words. But what I found is more important is these relationships, the fundamental causes of things. There is a recession coming. I'm 100% certain of that. The question, of course, is when and why. And I'm going to dive into that in my 2026 forecast. There are some really good recession indicators out there that give warnings in advance. And using those cycles, we have a pretty good idea when the next recession is coming. So if you're interested in that, you want to get the report. Here's the shock of the year, the Donald Trump. This is amazing. Wait to see what I'm going to show next. This is federal government tax receipts of corporate income. So tax receipts were from 2000 for 2020, like up, down, up, down. Look what happened to tax receipts. They skyrocketed. We have never seen this much of an increase in tax receipts. Now, what causes tax receipts? People have to be making money, profitable business to pay taxes. Remember the Enron scandal a few years ago? Well, the giveaway that it was a scam was they weren't paying any taxes. They weren't making any real money. So to see a huge increase in tax increases means there's money coming into the treasury, which can do two things. One, offset debt, and B, pay for other social programs or building programs in one form or another. Here's the really interesting chart. This is the tariff shock. Look at that. We've gone up as much in, again, tax receipts on customs duties. We've gone up as much in the last year as we've seen since 1960, almost double the amount of money has come in because of those tariffs. So, yeah, I know you can argue tariffs all day long, and I've talked about that in my presentation stock charts. They might increase prices, but one thing absolutely for certain that we can't argue with, they have increased money to the treasury. So that is a really bullish consideration. As long as those tariffs can be maintained, it's a whole new world in terms of tax receipts. Now, who knows what the president's going to do? I certainly don't. Nobody does, I think. He wakes up in the morning, decides what he's going to do. But this is something we really have to consider, this massive increase in the tax receipts and how that affects the economy. And one reason I think why markets have been so strong this year. So what to expect in 2026? Can we get this down in a nutshell? I'm going to try. I think stocks will move higher. Interest rates will decline. Inflation will increase. So if you want specific on it and the individual patterns, we'll go to my 2026 forecast report. Here's an example. Here's Bank of America. Can this chart really help you? What's Bank of America going to do? This is where cycles can help. Watch the next chart. Your view of 2026 for this stock is like this, or, well, I don't know what it's going to do. Or this. Here's my short-term cycle. There was a short-term low back here. When it coming up late January, rallies up to a peak in March, comes down. The red line is intermediate term cycles. The longer cycles are in blue. Starting in August, we have about a 65% chance of seeing Bank of America rally. It should start to get particularly strong about the first week of October when the red short intermediate term is in phase with the long term. So this is what cycle forecasts can do. They can give you the future of what to expect in the future. That's why in the forecast report, we've got every future, every stock market index and 60 of the big time stocks. So you can get a handle today on what's going to happen in the future. This is where cycles versus anything else in technical analysis gives a view of what probably is going to happen. So go to ireallytrade.com, write that down, you don't forget it, and January 1st will let you know when it's available. So until then, I want to wish all of you a happy and prosperous New Year, a Merry Christmas, and again,
Well, that wasn't like
to the people
a big
because without them, I wouldn't be here.
informative
Like today's presentation,
forecast.
post a note, say you do. If you don't like it, well, also write down why you don't like it. I certainly don't expect everybody's going to agree with me on everything. That's the way the world is. So until next year, 2026, this is Larry Williams, as always, wishing you good luck and good trading.
Okay, well, that was Larry Williams for you. Looks like no, it's gonna keep going higher. All right, now the music comes back. $15-minute here is at 486. Five-minute, pretty much the same. Interesting gap here. And we have this order block here. Okay, so interesting. So gap over here. Yeah, well, it's just probably gonna keep on going higher here. So is there any news here today? Ah, so Powell will speak at 10:30, but that's it. Ah, it actually almost. It's gonna get it anyway, pretty sure. I don't want to move it like up to here. Okay. I'll actually try a long here. 82. And price action looks, I mean, I would actually try to short this, but volume, it's like I wanna long it. Sounds like I need more coffee. Okay, is there anyone watching here, or what's the deal? Nope. Well, one person. Yeah. I'm just gonna try a long. Here? Well, probably not even get there. Who knows? I'm just Like even if today. Wait a second. Let me check this. Oh my. Holy moly. Interesting. It's just interesting. Okay. Jeez. Hmm. Hmm? Hello again. Hope you had a good lunch. So, like you're trading and you're working on your job at the same time? I am. Okay. But usually that's what you do? A little short on the 5 minute. Waiting 1 minute to confirm. Oh man. So what will be your target for the short? Or 72. Mm-hmm. That's also very close to the middle of this gap. Yeah, I'm thinking about trying along from there. Maybe moving this down. Points. It's better than a loss. Hmm. Yeah, maybe I'll move my nice reaction here so far. It's wait. Is it a 5-minute per gap? Yeah. Yeah, I even have it labeled. No. Oh, like, yeah. Well, for me, I only used to actually have the numbers 5, 15, 1, like 1H, then I know it's 1 hour. But for the stream, I started adding, 15M, 15-minute fair value gap, 5-minute, but I guess for the stream, I should always add F3G. So would you measure like this move in your system? Like the stop here and the bottom here? Well, this hit nicely here. Let's see. Not for trading the. Okay. Yeah, I think this is, I guess, it's like the very basic way to use Fibonacci. So yeah, this is just a 5-minute fair value gap. Right from this wick to this wick. I think I'll make a video today. Like not a live stream, but like pre-recorded video. I'm mentioning it because you might like it. It's gonna be on these levels here. Like usually, like the green, this green line, like these levels here. This one. So these levels, the green and gray levels, because that's like great for scalping. And this week, I don't know, like these NFP weeks, like, I don't know, they don't work so good for me. But anyway, yeah, on these levels here, and usually on most days they work great. Like you could just really, it's great for scalping, so that's why I mentioned it to you. I've been using this since like I think like around summer of 2024. And then great. Yeah, I think you will like it. And I was thinking about making a video about that for like the last 2 months or so. Like I just didn't know if I want to show it in public. Right. Yeah, makes sense. So anyway, yeah, I was like thinking about making a video about it for like the past 2 months or something, but I just didn't want to excuse me, give out like this little secret. But then on Saturday, this weekend, ICT made a video and he's doing almost exactly the same thing, but I'm doing it a little bit different. I know, but like I said, on Saturday, one of the biggest trading influencers on social media, ICT, he made a video about it. Mine is like a little bit different, but basically, I mean, it's pretty much the same, but it's just a small difference, couple of small differences. So now, I know, people are gonna think, oh, I just took his idea and made 2 changes to it, and I will say, oh, I invented it after ICT made a video about it on Saturday. But I mean, it's been on my live streams most of the time, these levels, like these green levels, it's been in my live streams. I didn't explain it, but they're there, so sometimes we think too much what others will think about. Yeah, I know. I mean, yeah, I just don't want to be looked at that by people like, oh, he just took something that he saw from someone else and he'll say, oh, I invented it. But again, I mean, these levels have been like on my live stream, so if someone complains, I'll tell him, watch my live streams. I know most people won't because most people don't watch my live streams, so but I do have the proof if anyone's gonna try to attack me or something. Ending 5 points on the short. All right, great. If someone tells you, tell them you know me. I will. I will tell them I know the Brazilian mafia. And yep. Exatamente. Could have made 15. Yeah, that is trading. Yeah, just follow your rules. That's the whole point of a strategy. Yeah, I would rather try longs. Yeah, but like less than 23 minutes until market open. And I'm trying to figure out I think the RTH is somewhere around here. So I know I said longs, but with the volatility of the open, oh, it's all the way down here. Wow, it's a big gap. One minute, sure, yeah. And now it's coming down, but I will cancel this. It's too close for me to the open. Yeah. Oh, that is pretty far. 280. That's very far. 280. Well, when it's that far, often it doesn't work. I'm gonna switch to the 15-minute here. Oh, really? Well, here we have blue skies right now over here. You guys have this? Yeah, raining cats and dogs. Yeah. Oh my god. Audio mic check. Why is it cutting out? Anyway, I don't want these on 15 minutes. This is a 15-minute gap here. Almost touched. You could draw it like this too. So there you go. Yeah, this RTH trade might not work today because it's really far. Like 220 points. So when the gap is too big, then it doesn't work. So I should probably still be looking for longs. Here's the gap. Smells like a short movement coming. Yeah, I mean, according to this opening trade strategy, that's what it says, and yeah, equal lows here. That's what it says. It just, the volume doesn't say it. So I don't know. I'm probably not gonna try a trade on the open here. Test. My God, audio was gone for a minute. So 390, 370. "16 minutes is long." Yeah. Volume says long also. So was that 390? Yeah. Well, if the price comes down here, I'll try a long from around here. But yeah, I'm thinking it could just go straight up. I'll make one more coffee though. Yeah, it just likes to go up right now. I might try a short around here, maybe. Unless it's just exploding. Let's see here. Yeah. Okay, I have too much stuff on this chart here. Well, only little bit more than 3 minutes. Let's see, who is watching? Probably only 1 or 2 people. Yeah. Just you. Yeah, probably. I still didn't check if this was some kind of tweet or something in the war. I'm thinking though, it must have been a Trump tweet. I didn't check yet. Oh, well, less than a minute. I was going to show you something, but let's wait for the open. Here we go. Yeah. Looks like it wants to go up. Yeah, it came right to here, which is 62, 618, only measuring the wick here. Yeah, it might chop because it's Monday. Oh, but at 10:30, Powell speaking. Not set up for me so far. Yeah, I didn't really see anything great either. It might range between here and like here. If it goes below here, then well, not that far anymore from here. Okay, so now it's gonna get interesting. Okay, so maybe small imbalance here. Well, looks like this might have worked. Yeah, I mean, price was just going up and up and up. All Asia, all London, for really, I don't know, no real reason. So now it has to come back down. Yeah, well, and reach this gap here, or imbalance. Man, it would have been almost 150 points so far. I'm going to try, I don't know if I should, but yeah, only demo, try long, I don't know. Okay, only demo long from here. Not great RR. Just had to leave for some minutes. Sure. Oh my god, come on. Don't tell me. Oh my god. This is just... Of course. And now it's gonna go up. God. Look at that. My god. 74.50. Point and a half. Okay, gonna try this. Nah, come on. Me don't likey. the stop loss. Well, trade is also not really going where I wanted it to go. Hence, only demo. Okay, I don't know. You might be already gone. Okay, see you later. Well then, I might end the stream. Or should I wait until I get stopped out? Mm-hmm. Nice. And almost there. Damn. Already hit. Oh, trading view. It's great. Alright. Well, that sucked. That's why I only traded this demo. Alright. Monday's stream done.